Welcome to my channel. Today I'm going to discuss the only trading strategy you need to ever make good money. This strategy works for every time frame. It has a very high reward and low risk. Let me tell you, if you really want to make money, you must have idea of this strategy or trade by it. At least have a good idea of it and trade by it if you want to make money from the market. Before we proceed, I urge you to subscribe, share, comment where there is need for it. Please don't fail to subscribe before we progress. What I am about to share is the secret weapon of 1% of successful forex traders. Those traders you see that are jubilating, this is their secret weapon. I can guarantee you that once you master this trading strategy, once you study it, you will belong to that 1%. What the strategy is all about is not about tips. It's not about tricks. That is why I always tell my students that at the end of every strategy you have from me, you'll be confident to trade the market. You'll be confident to have the control of your financial future via the forex trade. So we are not talking of tips or tricks. That is why a lot of people fail. They are looking for a magic wand. They are looking for that button to click and the money flows. No, it is not so. So in this video, we are going to discuss what is strategy as a whole. What is forex strategy? Why must you have a trading strategy? Why do most forex trading strategies out there won't work for you? 3 things to consider when developing or trading a strategy. How to create a strategy. Then the only strategy I'm talking about and how to trade it. Before we proceed, let us look deep into all these things. What is a forex strategy? Now, this is a holistic approach. A holistic approach to your trading. That means your money management, your understanding of the market, both technical and fundamental, your risk management, your emotions, your psychology, your environment, your financial muscle must be inculcated in that strategy. So if any of this mentioned is missing, that strategy will never work for you. So that is the strategy, your approach, holistic approach to the market. Why must you have a trading strategy? Trading is like a football. Until you understand that you are into a game of money, you will never make money. So you need a strategy to win. Simple as that. The football teams we have strategies. And let me tell you something. Strategies are dynamic. That means as a trader, you can have up to 10 different strategies that are winning strategies. The only thing there is that you have to understand the market dynamics at any given time to trade. So if you want to win, if you want to guide your money, if you want to protect your money, then you must have a strategy. Why do most forex trading strategies out there won't work for you? The answer is simple. Those strategies were built without your conditions factored in. Yes, the developer of the strategy does not know your financial position, does not know your risk management, doesn't know your psychology and emotions. So once you want to imitate, you can't make money by imitating someone just like that. No. Or you can't become a good pilot without being trained. Just let's say by sitting on the front of a plane, you become a pilot. It's not possible. That is why most of those strategies you have been doing or you have been using has never worked, and you keep jumping from one strategy to another. It is called cycle of doom in the forex. So that is why it does not work for you, which means you have to think of developing a strategy or working on a strategy that will suit your personality. 3 things to consider when developing a forex trading strategy. You must consider your financial muscle. One, you must consider your risk management. Two, then you must consider the broker. These are the three things you need to consider when setting up a winning strategy. How do you create a strategy? Now, you create strategy by bringing all these factors. Now, after you bring these factors into the mentioned factors above into a strategy, you need to validate the strategy. How do you validate strategies? We have two basic things to do. One, you have to back test the strategy for at least 5 years, 6 years, 7 years back. Then, after you back test it, you validate it via demo trading at least 6 months. If you're in a hurry to make money from the market, you will keep losing. So the takeaway here is that you should be patient enough to validate the strategy, even the one you are about learning from me today, so that you will be very confident, very hopeful that you are gaining your financial future using this strategy. What is the only strategy I'm talking about, and how can you trade it? Before we go into the strategy, let me tell you how I get to know this strategy, because you will love to know how I came about this strategy. If you are less than 10 years in the industry, you may not know who is called Peter Ben. Peter Ben was the founder of Forex Mentor. When I came to the Forex industry, I came with the mind of I was highly indebted. So I came with the mind of let me come and make money and settle my debts. So I just jumped from one indicator to another, one strategy to another. I used so much strategies. No one. I kept losing. I kept losing until I make decision of getting a mentor. And when I did my research, Peter Ben was on top of the chart then. I went into Peter Ben's mentoring course. That was when I came about the strategy we are about to discuss. This strategy, Peter Ben did not dig deep into it. So I had to make my personal research. And today, I am one of the most successful forex traders you can think of. You can be one once you understand what I'm about to teach you. The core of this strategy, what makes up the strategy, is simple: momentum loss through candlestick size and formation. That is a simple strategy, or the core of this strategy. Now, the strategy is called the hanging man trading strategy. Hanging man and hammer trading strategy. That is exactly what it is called. As you can see, this is a hanging man, and here it appears in the candlestick. Please take note. This is the shadow. This is the shadow. From this point down here is called the shadow or the wick. For you to trade this strategy, the wick must be 3 times of the body, the real body of the candlestick. We'll see this in detail in the following chart that is coming. How does it form? Now, this is how these candlesticks form. The market must be, if you are trading hanging man, the market must be in a clear upward direction. If you are trading hammer, the market must be in clearly downward direction. That's exactly what you have to put. One, jot it down. I hope you have your note. Jot it down. You are talking of hanging man, the market must be up. You are talking of hammer, the market must be down. That is the first thing to do. Now, since I said the hanging man, the market must be up, the movement of the market must be up, not the trend. There is difference between the trend and the movement. The trend takes a whole lot of years to change. Some trends last for 20 years. So I'm not talking of trend here. I'm talking of the movement of the market. That means if you are trading only trend, let's assume the overall trend is downward. That means you always sell. Downward movement, you only sell. But if you are trading movements, you can trade the upward or you can trade the downward, as the case may be. So in this trading system, we are considering the market movement at a particular given time. This market now is an upward trend movement, not the trend. Movement is up. Now, when it is up, it means that the buyers are in the market, right? This candlestick means the buyers had the strength. They have a high momentum. But the next day, which is this, The next day, which is this, the market opened at the top here and moved down. The sellers pushed the market, and the buyers felt, no, we have the strength. Let us push the market back up. And they started pushing from this point to this point. They could not push beyond this point. So this is where the market closed. That means they have lost momentum. They have lost the power to push this market beyond where it closed here, because when the market is going up, it forms higher high, higher high. That means the trend, when we say uptrend, it keeps forming higher high. So, but here now, it could not push to form another high or close above this candlestick. Now, as you see this, it is loss of momentum. There is no power, as you said. Now, the following day, the market opened and gapped downward. There is a gap between the closing day, which is here, and the opening day of the next day. So there is a very big gap. They have left these people here hanging. These people have been left hanging. These people have been left hanging. Hope is clear. So in this case, you have to trade these markets downward. You have to trade these markets downward. Sorry. In this case, you have to trade downward. The market has told you that these people have been left hanging. Those that thought the market would still buy, that bought from here, have been left hanging, and the market goes down. That is the simple way. The same thing applies to when the market is downward. As you can see, the market started moving downward, and it comes to this point. The candlestick opens here and goes here down to this place, and these people push and it closes here. That means the sellers could not push this market because the sellers push it down here. The sellers had the momentum. The market opens here. The market opened here, and the sellers pushed it with the momentum downward. But the buyers came to the market and pushed it almost 4 times or 3 times the real body. That's telling you that the sellers are tired. The momentum has started losing from the sellers. The same thing happened here. The sellers opened the market here. The market opened here. The buyers pushed it a bit. The sellers came to push it downward. But they could not push far into this shadow. And you see the buyers has come into the market, and the market moves upward. That is the simple way. If you can analyze these candlesticks, if you can interpret them, that is where the money is in the market. This is exactly what I'm explaining. This is the candlestick and the hammer, how it really forms. Let's check another graph and see. You can see this. This is a hanging man. The wick is almost 3 times the body. And the sellers came to the market, push it, engulf it, and then move down. And you can see down here now a hammer occur. Now, let me tell you, most of the candlestick formations are between 2 candlesticks, but hammer and hanging man, only one candlestick tells you that there is loss of momentum in the market. Then subsequently, wait for confirmation to check which of the candlestick will form. If the sellers forms here, like here, the sellers form here, then the market keeps coming down. That is it. What is the trading rule? You must establish that the trend is upward or downward. It's as simple as that. This does not work in a ranging market. No. There must be clear movement. You must wait for the confirmation. What is the confirmation? The 2nd day candlestick or the 3rd day candlestick. That is what I said. Here is a hanging man. That you see a hanging man does not mean that you will sell. Not at all. You will wait for the next day candlestick to open and close. And this is where it closes. It opened and closed as a seller's candlestick, telling you that the sellers are perfectly in market. So the 3rd day, you can join the market. This market is all about patience. It's all about patience. So when you do that, what are your own trading rules. Now, what we have discussed is about strategy. Now, you have to back your strategies with rule. No matter how good the strategy is, if you don't have a rule, you will not be successful with that strategy. So your own personal strategy or rules plays very vital role in trading the strategy. Now, let me tell you some of my own trading rules. I trade one currency at a time. As I told you, Forex is likened to football match, right? Once you are a team, you play one match at a time. Man U play one match at a time. Chelsea play one match at a time. So how will I play 2, 3, 4, 5 matches at a time? Remember, I am playing game of money. So at any given time, you analyze a market and pick a market with high probability. Please, if you're enjoying this video, subscribe, share, be part of my community. So one currency at a time, that is a rule. Then one direction. Let's still go about talking about the football matches. When there is match between two teams, one must play from left to right or right to left. So in a given trade, you either trade either upward or downward depending on your analysis. If you're trading hanging man, then know that all you'll be trading is a downward trade. All you'll be trading is a downward trade. All your target will be to enter at a point where the market will move downward with you. If you are trading a hammer, that is the end of a movement. You should know that the next trade is up. All you will do is trade up. You don't trade front and back. You will never make money trading back and front. So I trade one direction per trade. How do I exit the market? I make 1% of my profit, of my capital, or I exit when the setup is nullified. What do I mean by that? Let me take you back to the chart so that you understand. Now, this is the formation here. The hanging man has formed, right? Then a bearish candlestick has taken place. I will sell. Now, the only time I will exit this market is if I make 1% of my money, or if a candlestick closes above this. It's as simple as that. If a candlestick closes above this formation now, it has nullified this formation. If this market is here and this has formed, this is a bullish engulfing pattern, a hammer and a bullish engulfing pattern. So at this point, I will buy. Then when I buy at this point, I will not exit the market until the market closes below this point. That is how it works. So that is the exit point. I will not exit this market unless if the market closes below this. That is the exit point. 1% of my money, or when the formation has been nullified. That is exactly how I trade or I exit the market. Then no stop loss. I don't trade stop loss. That is why I built in my risk tolerance in my lot size. I trade very small lot size. I believe in drop by drop, you will make money. Imagine making $10 per trade, and in a month you do up to 20 trades successfully. 15 trades is 150 is $200. Any part of the world, $200 is not a small money. That is just the least. The more capital you have, the more you increase a bit in your lot size. So that is my own trading rules as to back the strategy. So you must have a rule that will back every strategy you are trading. Now, no matter how good your strategy is, no matter how good your plans are, if you don't fight your worst enemy in the trade, in the market, you will never make money. And who is your worst enemy? Is a broker. The broker is the enemy of every forex trader. That means you have to be very careful of who you handle your money to. Why do I say so? My first big loss was about $5,500 from the broker. When I lost that money, I said no. I had to compare with other charts. I saw that the chart was manipulated. So some brokers are out there to manipulate you out of the market. So you must be, so do you see, no matter how good the strategy is, once you go into the market, the broker has a tendency to affect your market. So how do you choose a broker? I don't recommend a broker because the broker that cheated me was recommended by another big time forex trader then. So because of that, I don't specifically say you should use this broker. However, for the past 6 or 7 years, I have two brokers that have been doing wonderfully well for me. So I trade with them. This is Octa Forex and Xness. These are the two brokers I've been using for a very long time now, and they have not failed me. How do you choose a broker? You must know how processes of choosing a broker, not just by mere recommendation. The most important way of choosing a broker is ask the broker who are your regulators. And once they mention it, ask them what is your regulatory code. They will provide you with the code. Go to the regulator's website and search if that code is in the website. That is the surest way of knowing that this broker is real. Then the second way is what is the speed of the transaction? Is it a broker that will tell you your money will reflect in your account 3 days after withdrawal? Is it a broker that once you deposit, it takes another 24 hours to reflect in your account? Let me tell you, some money are for backup. Those days when I was trading in my early days, I keep some money. When the market is far going deep into my money, then I fund. So immediately I fund, I need a broker the money will reflect in my account in minutes, matter of minutes. The speed of transactions, you have to master that from the broker. You have to check what is the speed of transaction from the broker. And one of the fastest way to do that is contact the support. What is the speed of response? That will tell you how fast. This is the few things that I can tell you about broker. So they are very essential. As I said, you can use the broker I use, Xness and Octa Forex. I have a link in the description here that you can contact them, but it's optional. To me, they have used them for years, and their services are top notch. So with this, if you dig deep and practice this strategy, obviously you have the courage and the strength, the understanding to maneuver the market and keep making money as a forex trader. Thank you for watching and thank you for being there.